are you guys thinking about AI and the impact on the labor force?
Yeah, I think, there's some clear evidence of it. I think the research that's out there kind of arrives at mixed results, and it depends on how you think about the substitutability between AI and the workforce. There's this really impactful paper by Eric Brynjolfsson and some colleagues at Stanford, which showed for particular categories, computer scientists, some call center workers, you saw, particularly for younger age groups, there's been this negative impact. I think when you look at the labor market across different demographic groups, it's a super interesting story. You have the 25 to 54 age group, what we call prime age. The labor market looks completely fine. Unemployment rate's low and stable, employment to population ratio is elevated, labor force participation rate is elevated as well. All of the weakness from a demographics perspective is in that lower age groups. Now, I do think some of this is related to AI, but I think more so it's reflecting what is a weaker labor demand backdrop and people that are coming into a workforce at a time where there's lots of uncertainty in the macro backdrop.
I mean, does that view change with Amazon and the 14,000 jobs that it's cutting, the 8% cut at corporate headquarters at Target, the thousands of jobs at UPS that will be gone this year? I mean, it just does seem like today we're getting a deluge of news.
It does, but I want to put those numbers into context. So when you look at the US economy, you take the JOLTS data, we have 1.7 million layoffs in a typical month. 30,000 is a drop in a bucket relative to the typical labor market flows that take place. Every month we hire 5 million people. So the 50,000 jobs that we see added or 100,000 jobs we see added is the net of massive flows, millions of worker flows that are taking place back and forth. I like to look at the macro data that we do have. So far, the initial jobless claims data is not showing us really anything. We get WARN indicators, which is at the state level. Those haven't shown any deterioration or pickup. So I think it's important. It does fit into the narrative that AI may be impacting the labor market idiosyncratically here and there, and it is a story. But still, I think we're in an environment where layoffs remain low.
All right, so Matt, is the overall U.S. economic backdrop okay? And Fed, hey, you don't need to cut rates tomorrow?
Yeah, no, well, they will cut rates. We expect they cut rates by 25 basis points.
Should they, in your view?
I think that they have a strong story to cut rates, but they are dealing with this significant divergence between a growth backdrop that looks fine. We had close to 4% growth in Q2. Q3 growth looks like it's going to be somewhere between 3 and 4%. The Atlanta Fed tracker is closer to 4%.
Feels kind of okay to me.
That sounds, I think, fantastic and is not at all a reason to be cutting rates. But the labor market picture has shown some weakness. We've seen job gains which have slowed materially. There's been some upward movement in measures of labor market slack, all somewhat at the margins. But it does push the Fed in a little bit more worried direction about the labor market than inflation.
How does the lack of government data that we've gotten or that we haven't gotten over the last few weeks really muddy the view of how confident you think the Fed can be in what it says tomorrow?
I don't think it's too problematic for tomorrow, to be honest. We had the last FOMC meeting in September. We were only expecting to get one more jobs report between the September and October meeting. That can be supplemented a little bit by the ADP data we got earlier in the month.
Yeah.
Plus, we now have this weekly reading, which I would add, actually, this morning looked pretty good. If you aggregate it over the past 4 weeks, looks like the private sector added almost 60,000 jobs. That sounds low from a historical perspective, but when we think you only need to add 50 to keep the unemployment rate stable, it seems okay. I think it becomes highly problematic for the Fed in December. If we haven't had the government reopen, if we don't get an October inflation print, if we don't have an unemployment rate that's coming from the October jobs report, and a period of time where I think it's going to be a far greater debate within the Fed about what to do in December, I think that's when it becomes problematic.
I mean, you've got to believe the Fed's going to lean on whatever, the regional banks. There's got to be lots of conversations going on to get an idea of really what's going on. Having said that, in terms of the Fed, isn't it better for the Fed to be late rather than early with policy?
So I think this is always a debate that's ongoing, and I think that comes down to how they think about the risk distribution. I think for an extended period after seeing tariffs, they were more worried about upside risk to inflation, and therefore they were willing to be later rather than earlier in terms of cutting rates. Today, I think the risk distribution has shifted for them pretty clearly. They are now less worried about the inflation side, more worried about the labor market side,
right.
And therefore they are moving a little bit, not preemptively, but at least reacting closer to real time to what's happening in the labor market.
The 5 names that I won't say we got them yesterday, but they were kind of confirmed in a way yesterday for the next Fed chair. How do you view not these people as individuals, but the fact that this process is playing out in such a public way, and whether or not that undermines at all the power of Jay Powell right now for the next few months?
Yeah, coming into this whole period, there was Secretary Bessent had floated this idea of having a shadow Fed chair out there that was kind of nominated long ahead of time, that could be out there speaking and trying to undermine, potentially divert attention away from Chair Powell. I think that there's probably some of that happening. We all know that Governor Waller is one of the top 5 candidates. He's on the short list at this point in time. He's been ahead on this idea of cutting rates because the labor market was weaker, and I think that has emboldened his position a little bit. Governor Myron, similarly, is coming out very aggressively calling for rate cuts. At the same time,
know his playbook, right?
Correct. I mean, it's very clear he's going to dissent tomorrow in favor of 50 basis point rate cuts again. At the same time, you have a committee that I think Chair Powell continues to lead, and a committee that's very divided on the path ahead.